We have second quarter results from Applied Materials just out. I'm Futurum Group's Chief Market Strategist, Cory Johnson, with the business story behind one stock on the move. That stock is AMAT, Applied Materials, and Wall Street likes a beat or a miss, and this was a beat. They kind of always beat. It seems like they manage their guidance very effectively. Indeed, the guidance they gave us for next quarter was as wide as a Mack truck, but maybe more interestingly, the results they put out here do show some really interesting developments for AMAT and indeed for the world. Let's take a look. So Applied Materials, they announced their second quarter results, as I mentioned. So $6.65 billion in revenues. That's flat over the previous year, and man, flat's okay. Their operating margin's fantastic, 28.8%. Lots of profits from that company, and generated $1.4 billion in cash. So we like all that. We look a little bit deeper though. We really see as the business hasn't picked up, but it seems to have flattened. The declines, the revenue declines have stopped there. And they've put up some kind of steady operating margins. They're really getting better just a little bit. But their most important thing, the semi-cap equipment, the stuff that makes semiconductors, they service those machines, but making the machines is most of the money that they make. It still dominates their business, 74% of their business in this quarter. And that business is not doing great. Again, kind of bottoming out, down 5% on a year-over-year basis. As I mentioned, if revenues are flat, that means they made it up in services. But equipment sales have stalled, to be sure, but they could be getting a lot worse, and they have done worse in the past. It looks like things are starting to come back, and that was a commentary in the conference call. One of the interesting things that supported this business over the last quarter, really the last few quarters, is a surge in Chinese consumption of semiconductor equipment companies. Now, I know you're thinking, wait a minute, I thought there were tariffs. I thought the Europeans and the Americans are refusing to sell this stuff into China. Well, the very best semiconductor equipment manufacturing machines from ASML, from, KLA Tencor, from Applied Materials as well, those are not being sold into China. But the stuff that makes basic semiconductors, fatter wafers to be sure, but the foundational semiconductors that are most of the semiconductor business, those are being bought by the Chinese in great numbers. And indeed, it was both the largest part of the business for Applied Materials in the quarter and a surging business for Applied Materials. All right, so how did the stock react when the numbers came out? Well, it just kind of yawned. The stock was down about 1% in after hours trading, but after a fantastic year, in the last year, Applied Materials shares are up 77%. Now, with all the excitement about AI and the most advanced semiconductor manufacturing possibilities coming down the pike, what's really interesting here is that Applied Materials actually sees the DRAM market coming to them. And you can see it in the numbers. I was really surprised to see that now 34% of revenues were of the systems that they sold, and this is not including services, but 34% of the revenues for the systems they sold were for making DRAM, which is unusual for this company. It's a very volatile market. And when asked about that in the conference call, CEO Gary Dickerson talked about how, because DRAM is getting more complex, it's kind of entering into the sweet spot for Applied Materials.
Really, the big focus for us is enabling and winning major device architecture inflections. So, when you break out all of these different device segments, certainly foundry logic leading edge, the opportunity there for us to grow is significant because we have a very high share of those big inflections. The gate-all-around, backside power delivery, wiring is a real strength for us. And in DRAM, we gained 10 points of overall DRAM share over the last 10 years. And if I look forward at the architecture inflections in DRAM, we're even better positioned. Those will be much more materials intensive, materials engineering enabled, and that's going to be a really good position for us.
So DRAM getting more complex is a good thing for AMAT. DRAM, AMAT, listen to all these acronyms. Nonetheless, Applied Materials liking that DRAM is getting more complicated as it means more sales for them. But what's one number that summarizes this whole business and this quarter, tells us a whole lot? The drill down bite coming up right after this.
The drill down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
Okay, so here's our summary of Applied Material results for the second fiscal quarter for this company. $6.65 billion in sales, nice margins for the business, very profitable, generating a ton of cash. But if you really want to summarize the whole thing, the drill down earnings bite, the one number that tells us a whole lot is their equipment sales have stalled. They're down 5% on a year-over-year basis. Not desperately down, but still down. They've been down the last few quarters. But the CEO Gary Dickerson telling us that better days are ahead. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. Check me out at X at CoryTV. You can see us on TikTok or on Instagram at DrillDownPod, and robust earnings reports and more on the YouTube page for Futurum Group. Leave some comments. Tell us what you think. Drill Down Earnings, part of 6.5 Media.